please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Q4 earnings were operationally above expectations, but the company has now also approved the merger of Indus Towers into Bharti Infratel. Naveen Kulkarni, the co-head of research at Phillip Capital, joins us on the phone line. Naveen, good morning. Before I ask you a view on Bharti Airtel, now with this Bharti Infratel and Indus Tower merger, we now have the largest tower company in the world, apart from, ex of China. What kind of synergies do you see with this merger, and what did you make of the enterprise value of this, 71,500 crores?
So the enterprise value is pretty much in line with expectations. So the valuation seems similar to what Bharti Infratel is. So from a valuation perspective, the deal seems to be in line with expectation. From the perspective of synergies, I don't believe there are a huge amount of synergies between the two entities, because typically the three largest cost components for any tower company is rental expenses, second is power and fuel, and third is maintenance. All three expenses are on per tower basis. So there are hardly any synergies with respect to that, but there will be some bit of synergies on the overhead expenses. So that can help when the operations get merged. But otherwise, there are limited synergy benefits, but the bargaining power with a very large portfolio can increase.
Okay. Well, I just want to read a note coming from one of the brokerages that if a merger between Infratel and Indus happens, the major savings would come from dividend distribution tax savings. That is through avoidance of double taxation at Indus and at Infratel level, and other savings, of course, in OPEX and economies of scale. That's the view coming in from Citi on this merger. Naveen Kulkarni, good morning. Do you have a buy or a sell on Infratel now after this deal?
So currently we have a neutral recommendation on Infratel, but as of now we still are neutral on the stock because of the challenges with regards to tenancy exits that we are seeing. So that will happen over the next 1 year or so. The benefits with regards to higher bargaining power and operational synergies will take some time, is our understanding. Nonetheless, the deal is a positive, and in the short run it could have a positive rub-off effect.
Okay, and what about Idea? There is, of course, the TDSAT setting aside the TRAI ruling for the moment. And, of course, now they could be encashing out of Indus Towers as well. Is there any tactical trade in Idea at all because of this?
Yes, so Idea will get 6,500 crores. So that is going to help them to deleverage their balance sheet, and it is much needed for them because you see, post the merger, both the entities, Idea, Vodafone, are an underinvested entity, and once the merger happens, they need the cash infusion, which essentially to augment the network. So
buy or sell? I mean, would that make you positive on the stock?
We are positive on the stock from the medium to long-term perspective, primarily because of the kind of spectrum bank and the synergy benefits that will start accruing post the merger. Okay. And with some bit of cash in their hands, it's going to help them to improve the network quality over the next 1 year. Okay. So that bit is going to help them to retain customers as well as win customers.
I want to ask you about Bharti particularly, because, over there the results were unimpressive. I mean, tariff cuts is what they've seen, so much competition, mobile business in India is under pressure. Would you stay away, or do you have some hopes there?
So, Bharti, our understanding is the operational performance has been exceptionally strong. So most of the key operating parameters, if I were to look at the per subscriber data usage growth, is 23% sequentially. Total data usage is up 40% on sequential basis. So in terms of total data usage, they are very much catching up with Jio. So that is a very, very healthy factor. Other than that, if you also see an important metric, which is the churn, churn has actually come down on a sequential basis, even though competitive activity has been quite high. So from 3.3%, it's come down to 2.8%. So that means they're able to retain subscribers pretty well. So all these factors point out that more or less we are at the bottom in terms of the tariff cycle. Going ahead, we should start seeing improvement in the financial metrics because of the kind of subscriber additions that have happened and the consolidation in the industry that is happening.